Hello everyone, this is Haralambos Pissouros, Senior Technical Analyst here at IronFX Global, bringing you the technical updates for October 29th. Today I would like to update the technical picture of Euro-Dollar, which collapsed following the FOMC decision. I would also like to describe the outlook of New Zealand dollar, US dollar, which slid after the Reserve Bank of New Zealand policy meeting. So let's get the ball rolling with the Euro-Dollar currency pair. Euro-Dollar tumbled on Wednesday after the Fed held interest rates unchanged, but sent strong signals that a lift-off will be on the cards at the December meeting. The pair fell after it hit resistance near 110.85, broke below the psychological zone of 110 and hit support at the 109 level. The price structure on the 4-hour chart still suggests a short-term downtrend, and therefore I would expect a clear dip below 109 to prompt extensions towards the next support at 108.50, marked by the low of the 5th of August. Our short-term oscillators detect downside speed and support further declines. The RSI fell back below its 30 line, while the MACD, already negative, has stopped and fallen below its trigger line. Nevertheless, the RSI has bottomed and looks ready to cross again above 30. This provides evidence that a corrective bounce above 109.50 is possible before the bears decide to shoot again. In the bigger picture, as long as Euro-Dollar is trading between the 108 key support and the psychological zone of 115, I would maintain my neutral stance as far as the overall picture is concerned. The pair is now headed towards the lower bound of the range, but I would like to see a clear break below the 108 hurdle before assuming that the longer term trend is back to the downside. Now let's carry on with New Zealand dollar, US dollar. This pair slid yesterday after the Reserve Bank of New Zealand kept rates unchanged but showed concerns over the strength of the Kiwi. The pair fell below the 0.67 obstacle and hit support at the next hurdle of 0.6620 before rebounding somewhat. A clear break below 0.6620 is likely to signal the continuation of the short-term downtrend and could initially aim for the next support at 0.6585. The MACD stands below both its 0 and trigger lines, revealing downside speed, but the RSI hit support at its 30 line and turned somewhat up. This hints that a minor bounce cannot be ruled out before the next negative leg. On the daily chart, the medium-term picture still looks somewhat positive. However, given that there is room for further short-term declines, I would switch my stance to neutral as far as the overall outlook is concerned. So that's it for today. For more analysis and charts, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Haralambos Pissouros, Senior Technical Analyst at IronFX Global, wishing you solid trading.